Good evening, good afternoon. Today is June 26th. This is Marc Cuniberti, financial columnist for the Union, a half a dozen newspapers, and host of Money Management Radio. Money Matters on KVMR FM and 65 stations nationwide. So it's been a little while since we've done a COVID and market update, and boy, I can tell you it has just been totally crazy. So let's kind of catch up on what's been happening with the market. The market was all-time high right around February, around 29,513 on the Dow. And it got down to about the third week of March, about 18,213. And today sits at 25,015. So from the all-time high of 29,005 down to 18,300, somewhere in there, we saw a 38% correction. And to where we are today, we've seen about a 38% up direction. And now it looks like we may be stalling out. So we all knew that the COVID cases were spiking, and then we did this horrendous national shutdown, a worldwide shutdown. And I was always of the opinion that more damage is going to be done by shutting down than by not shutting down. That was highly debated. The reason I'm saying that is because every 1% of reduction in GDP, which is the gross domestic product, all the goods and services sold in the United States, all the money that's transacted, the shutdown, if for every 1% we see of GDP that's reduced, we will see, the theory goes, about 30,000 people die of starvation worldwide. The reason being is we have the largest economy in the world, and that when our economy goes down, it brings down other economies, and economies that are marginally, maybe third world economies, when they have their economies go down, people starve. So that's a fact of it. So the theory goes with every 1% of GDP that we see reduction in the United States, we're going to see 30,000 people die of starvation nationwide. My original forecast was for 50 million people unemployed. Latest results day or so ago was 47 million people unemployed in the United States. We're seeing retail sales, of course, fall. And of course, since I've done the last update, we're seeing restaurants, bars, hotels, airlines, they're all starting to fire up again. But now we're seeing a resurgence in COVID cases. So we're going to take a look at a good website that I look at, which is called Worldometers. But first of all, in my Nevada County, we were stuck at about 42 cases for the longest time, up to about 6 weeks ago. And now it's spiked up to 101 cases in Nevada County, and one death. And so that has been on the rise. Now, there are various theories on why this COVID has resurfaced, and now we're starting to see that we may be going through the same thing that the island of Hokkaido in Japan went through. They shut down for about 3 weeks. Then they opened up and they saw a resurgence of cases, and they had to re-shut down again. where around the third week of March we saw the market stop falling at 18,300, the Dow, and then rocketed it up 6,000 points in the next 8, 9, 10 weeks is where we are now. And the stocks that started off the increase were the stay-at-home stocks. What are the stay-at-home stocks? They're for video conferencing, they were for shopping, they were for disinfectants, a lot of internet usage, movie streaming, whatever you did at home or had to do at home, we saw those stocks start to run first. Even spice companies like McCormick, cooking companies like Hormel, Campbell Soup, the things that you would expect were rising first. And then, of course, the other stocks that supported the conduit of the internet, such as Microsoft and some of the other internet conduits, what we say, started to rise. And then we saw the gamblers, the day traders, come in to the airline stocks and to the cruise ships and start to bid those up. So well publicized in radio show and on the media, I was writing articles that said that the markets had not taken into consideration the severity of what could happen with this COVID-19 coronavirus about the third week of February. And well publicized, we started to sell pretty heavily 2nd of March and sold all the way into the third week of March, where we then started to add positions back again. And of course, the gains, when you added at 18,300 and then it increased to 25,000, the gains were pretty stunning, actually. Now we're seeing when the news started to come out that COVID prices that COVID cases were starting to slow. The new cases were starting to come down a little bit. We saw the stay-at-home stocks sort of stall out, and then we saw people were value investing. Value investing is when you look at companies that are beat up that haven't run yet, maybe oil or banks or things of this sort, and started to bid those stocks up as well, and the stay-at-home stocks started to fall. So we saw what we call a sector rotation. The stay-at-home stocks skyrocketed, then they started to fall, and then the stay-away-at-home stocks, what I call the stay-away-at-home stocks, started to rise, and the stay-at-home stocks started to fall. With the increase in COVID cases, we did see then the stay-at-home stocks, the internet stocks that had risen and then started to fall, started to resurrect themselves and started to go up again, because people are thinking, oh no, we may have to shut down again. And as a result, today especially, last couple of days, we've seen some pretty horrendous corrections. Banking stocks got hit today. Every day seems to have a particular sector that is hit. And so we are seeing another rotation, but this may be a rotation into the realization that the COVID cases could come down. And heaven forbid if we had to shut down again, then I think it would be really hard on the economy. Now, we had the bonus payments in the unemployment, $600 a week extra. That's going to be running out the end of July, somewhere in July. We saw the Paycheck Protection Program, the PPP loans. Those are made to small businesses, and then the CARE Act, which also sent more money out. We've seen an amazing, eye-popping amount of money going to the banking sector, and of course they were buying their shares, and we were seeing a lot of money go through there. I've seen CNBC notate this as a wall of money. I mean, how can the stock market go up when people are hurting? And I also had forecasted that somewhere around 25% of the retail businesses will not come back. We are seeing a new type of stay-at-home business, and how we do things. Indeed, Twitter and some other companies have said their employees don't have to come back. So what made the news was this great disconnect between the markets and what people were suffering through. So now with the increase in COVID cases, we're seeing that people are starting to think the stock market may have run its run, and we may see another correction coming. And the only reason the stock market has gone up, at least in my opinion, is because, well, there's two reasons really. The hope that the economy was going to return to normal rather quickly, and this wall of trillions of dollars from the Federal Reserve and the government coming at both consumers, banking sectors, and companies alike. When companies have to borrow, they call those bonds, and the Fed has said they're going to backstop bonds. They're going to buy exchange traded funds. The Fed is just basically coming in and opening the floodgates of money, and a lot of that money is finding its way into Wall Street. Now, what happens? There are two sides of the story now. Will the market correct again with the threat of COVID resurging, or will the markets correct with the threat of the economy shutting down again? Or has the market run too far too fast? It has been an incredible run. Or will this wall of money from the Federal Reserve and the U.S. government continue to maintain and keep this stock market up? In my opinion, I think it might be time for a breather. A V-shaped recovery was forecasted, which means it would go down and shoot right back up, and those have been very common. It goes down and then shoots right back up. A W would be go down, it goes up, and then goes back down again, and maybe retests the low somewhere around 18,000, 19,000. I don't know if it's going to correct that far because of this wall of money that the Feds are producing, but I do think that a correction could be in the making here because of the increase in COVID cases. And so what we're doing, at least in our portfolios, is we're basically lightening up. We've been lightening up for about a week, 2 weeks, and we're staying in some of the stocks that I particularly like, that are some of the disinfectant stocks, some of the basic stocks, maybe a couple of stay-at-home stocks. But for the most part, we're hiding out again in bonds again, and even those got hit. So it's definitely a hard place to read. This market is not for the young, and a lot of day traders have come into this market, buying up the airlines, the cruise ships, buying options, just going crazy. We can see this from the largest, this groundswell of options that are bought in one contract only. The little players are in there. A lot of the big money managers have said that they're going to take a breather here, that they're not going to be allocating any more money to stocks. But it is a difficult market to trade, and I would say if you're a day trader, please be very careful. This market moves extremely fast. I've seen accounts gain and lose tens of thousands worth of dollars in a day, and so it's extremely dangerous. The stocks that I would be looking at would be consumer staples, perhaps, mortgage-backed securities. Gold is one of my favorites right now, and even gold stocks, we don't see them reacting with gold. We're seeing them react with the stock market. So basically, we're moving out of gold stocks per se, but into gold, into GLD, and into silver, into SLV there as well. So it is a difficult market to trade, but I don't think now is the time to be throwing big money at this market. I think hiding out is probably a little bit better of an idea than going all in for sure. This market has run incredibly high, incredibly fast. We saw the fastest correction from the all-time high to a 20% correction happened in about 3-4 weeks, which is stunning. And then we saw one of the fastest reversals back up from 18,003 to where it is 25,000 here. So you have to be extremely careful in this market. One of the interesting factors that I've seen in the just in society, outside of the Black Lives Matter racial protests, which seems to be tearing this country apart, hopefully that will subside and we get some real changes there, so all people of all colors feel safe in this country, and indeed worldwide. But the mask, no mask thing has turned into a hot button politically. I run a couple social media pages, and anytime somebody posts something about wearing masks or not wearing masks, not only do people disagree, but the name calling and the hate just gets putrid. It's just very difficult for me to see how this mask, no mask thing has taken almost a political left-right front to it. The illustration of this left-right hating each other is just off the charts and extremely uncomfortable and very sad for me to witness. My personal views on this is I was never supporting a shutdown. I knew the economic damage and the starvation it would cause. What I did agree with is that we should have sequestered those that were vulnerable and let the young and the healthy run the economy so we wouldn't see this. The United States government, and indeed governments worldwide, have come to the conclusion they're not going to shut down again. At least they say that. I always say never, because if it does resurge with a vengeance, they're going to have to shut down again, and that is going to be devastating. That's another reason why we have to be careful in this market. As I said, my opinion of this, we should not have shut down. I have no aversion to wearing masks. It doesn't infringe on my freedom. People will say, well, you wear a mask, you'll be on the next train to Auschwitz. No, I'm not on the next train to Auschwitz. But here's the way I think of it. If I bring a mask everywhere, if I go into a store and they're not wearing masks, okay, then I'm fine with that. If I go to a store and they want me to wear a mask, I will wear a mask. Now I have a brother that is African American and he's overweight, and I would like him to stay home because I'm worried about him. But I don't think we should shut down again, nor I didn't think we should shut down in the first place. So I'm kind of in the middle on masks. There's no harm in wearing a mask. I don't mind wearing a mask if I go into public places, and I do. If I go into a store and they're not wearing masks, I'm not going to jump all over anybody for that. Do I think it's the right thing to do? No, I think simply it's easy to wear a mask. And a lot of people say masks don't help. Well, I really don't believe that. I think they do. But I'm not a militant mask wearer, nor will, approach people and say, you have to wear a mask. I think it's a good idea, and I do. And I do carry one around. But when we go out and play tennis or pickleball or whatever, I don't wear a mask. So I am kind of in the middle. We have to be very careful. I don't know what's going to happen. This is the summer. The hot weather is supposed to knock this virus down. It doesn't seem to be doing that. And so in the winter, they're saying a second wave is going to hit. We are seeing that this is still the first wave. From some of the experts saying this is not the second wave. This is the first wave. The second wave will be around in December. So right now, I think in the market, this is a very critical time. We don't know what the reaction will be of states and the country enforcing masks and reopening again, or shutting down. Right now, a lot of the states, as of today, are saying that we're going to slow down the reopening, and I probably think that's a good idea. How deadly is this virus? There's been thoughts on that this is a flu season, and as a flu season goes, this is actually a lower type of flu season as far as people dying. The stats are all over the board. You can get one half of the people will come at you with this scientific study, and another half will come at you with that scientific study. So it's a real hard decision to make, and a hard thing to negotiate between people. Presidential elections, oh, that's another tough one. This is all up in the air. I can't say the stock market likes Trump, but that is beginning to change. We're reading some analysts on the financial sector that's saying that's beginning to change. I can say comfortably the stock market is a little bit afraid of Joe Biden, but he is a little bit more of a moderate. Most of Wall Street did not want a socialist type candidate in there like Bernie Sanders or Elizabeth Warren. So if Biden does get closer, higher up in the polls, I think Wall Street will react there. So the fact that we may be shutting down again, hopefully we won't. A lot of states are delaying reopening, and the presidential elections are not a slam dunk for the Republican side. I would say now is an extremely good time to hide in the market, and not in stocks, but hide, maybe have a few of the select stocks that we recommend here, but which I won't name. But for the most part, be it fixed income or just in cash. Cash is an asset. Cash is a protection. It doesn't yield any gains for the most part, but it doesn't yield any losses. In any case, the website is moneymanagementradio.com. The YouTube channel is Marc Cuniberti. I want to thanks for listening, and thanks for watching. And be careful in this market, okay? Be very careful. Don't be throwing a lot of money at this market, in my opinion. You want to stay basically hunkered down with maybe a few select stocks. Okay, again, thanks for listening, and I'm an investment advisor representative and a hold California insurance license OL 34249. Have a great day and be safe.